the ability to absorb government debt is also limited.
Before I get back to the renminbi and the dollar, is that going to be a big problem for India? Because if the renminbi is going to remain stable, there will be other currencies that appreciate against the dollar, the won, the real, the Indian rupee. So do you see the big problem in 2010 for the RBI being the deluge of dollars?
I think that would happen anyway, because and that's not the Chinese problem, it's the American problem.
Okay.
It's with US and European interest rates held so low, everybody is moving out of safe assets into anything that is moderately riskier, which promises a return. And with emerging market debt looking promising, there's a lot of money that's flowing into emerging markets. The cap on that we've opened up for investment in government securities is almost exhausted. That reflects the fact that everybody's buying Brazilian bonds, a whole lot of emerging market bonds. So that's going to happen anyway. But I think the fact that you have a country which is able to hold its currency, even while your currency is appreciating as a result of capital inflows, means that you suffer a competitive problem.
Yeah.
So that, to my mind, will be the bigger problem for the Asian competitors, which is China is getting a competitive advantage, while we are not able to hold, and therefore we suffer, our exporters suffer as a result.
Okay. So where is the problem that you see lurking? Where is it going to erupt from? Is it going to erupt from the actions of China, or is it going to be something erupting in the US?
Well, there's a twin dance, right? They're sort of twins locked in.
Okay.
The US cuts interest rates to the bone. China is able to sort of not match it one for one, but keep interest rates relatively low and import US monetary policy in a sense.
Yeah.
And that's why you get Chinese, potential bubbles building up. You see that the Chinese don't use interest rates as a method to control activity. When they want to tell their industries not to expand, they basically cut back on credit.
Okay. So what sense you're getting? The sense you're getting on the renminbi and the dollar, and the sense that you're getting on Chinese economic thinking, or is it very, very veiled?
I think the Chinese certainly are very worried about the export sector, which is why they've held the renminbi.
Okay.
I think they understand the political limits to how long they can hold it. Because at some point the U.S. Clamor is going to get very loud.
Let me get a quick reaction on what is your projection for the trajectory of U.S. growth?
I think next couple of quarters it could be quite good. I mean, it's already been good for a couple of quarters. It could still remain good for the next couple of quarters. After that, it's anybody's guess, because what is happening right now is, you had demand plummet during the crisis. Production fell even further, and then demand started coming back, and production has been slow to react. So inventories have come down. Corporations are going to be producing for some time to catch up. That's going to give a boost. But then after a couple of quarters, we have the stimulus winding down. We have this inventory kickback sort of winding down. At that point, is the consumer confident enough to start spending? Do we see jobs come back because people cut too deeply? Or do corporations say, well, we cut them, we don't need them, let's wait and see, and you have a more prolonged jobless recovery? If it's that, then I think we have relatively slow growth. But I think putting everything together, the fact that debt has already climbed to high levels in the U.S., public debt, you'll have higher taxes. My sense is we're not going to go back to the growth rates that we saw pre-crisis.
Okay. I'll take a break at that point, Rajan, and come back and discuss that more in just a bit. Stay right there.